Over the past 3 months, GWH has been on a roller coaster, but nothing compares to the dramatic price surge on October 10th, when the stock closed at 4.41 up from just 1.72 the day before. This explosive move, representing a 156% increase in a single session, has caught the attention of both institutional and retail investors. Such a significant shift often points to a major catalyst or event that's changed how the market views the company. In this video, we'll break down what happened, why it matters, and what technical analysis tells us about where GWH might go next. The day of the surge, trading volume skyrocketed to over 241 million shares, far above GWH's usual daily activity. This isn't just a number, it's a clear sign that both big institutions and everyday traders were piling in. When volume jumps like this alongside a price breakout, it usually confirms that the move is real and not just a fluke. For this, GWH's trading volume was pretty modest, making this sudden spike even more remarkable. It's a textbook example of what traders call an accumulation pattern, where buyers are aggressively taking positions. Let's look at the moving averages. GWH's current price is well above all its key moving averages, including both short-term and long-term indicators. The short-term averages like the 5-day SMA and EMA are higher than the longer-term ones, which is a classic sign of a strong uptrend. Even more telling, the EMA values are consistently above their SMA counterparts, showing that recent price action is being given more weight. But there's a catch. The current price is far above the 200-day averages, which could mean the stock is overextended and at risk of snapping back toward its long-term trend. Nickel indicators are painting a picture of extreme bullishness, but also caution. The RSI is at 85, which is deep into overbought territory. The MACD in its positive histogram confirms strong upward momentum, while the ADX shows the trend is powerful. However, the stochastic indicators are a bit more moderate, still bullish but not as extreme. Bollinger Bands show the price is above the upper band, suggesting the stock is stretched in the short term. Williams %R and the Money Flow Index both confirm heavy buying pressure. All these signals together suggest the rally could be running hot. Linear regression analysis adds another layer to the story. The model shows a slight upward slope, but the R-squared value is extremely low, meaning the model doesn't explain much of the recent price action. The predicted price from this model is just 1.72, far below the current 4.41. This huge gap, with a deviation of nearly 156%, highlights just how much of an outlier the recent surge is compared to historical trends. It's a clear signal that something extraordinary has happened, and the usual models aren't capturing it. But what's likely to happen when the market opens next? Based on the current momentum and technical signals, GWH could open even higher. But with the stock so overbought, there's a real chance of volatility, maybe a gap up at the open followed by some profit-taking as traders lock in gains. The VWAP sits at 3.6, which could act as a magnet for price consolidation. Meanwhile, adaptive moving averages like the MAMA and FAMA are well below the current price, hinting at dynamic support if there's a pullback. Support and resistance analysis is crucial here. The immediate resistance is at 5.33, which is the recent high. On the downside, support sits at 3.04 and 1.72. The current price is much closer to resistance, so we might see some selling as traders take profits. Volume profile analysis shows heavy trading at 3.305, 3.6365, and 4.4445. These are key zones to watch for support or resistance. Fibonacci retracement levels also suggest possible support at 3.65 and 2.62, giving traders more reference points. Intraday, GWH could test the 4.4445 level as support. If buyers step in, there's potential for a move toward the 5.33 resistance, but if selling pressure dominates, the stock could fall back to the next support zones. Volume concentrations at specific price levels will be crucial for understanding where the stock might pause or reverse. Watching these patterns can help traders anticipate the next big move, especially in such a volatile environment. ATR, or average true range, is at 0.44, which tells us to expect big swings. Based on this, the next session could see highs around 4.85 and lows near 3.97. But remember, with the kind of volatility we've just seen, these ranges could easily be exceeded. If momentum stays strong, the stock could break out even further. If profit-taking kicks in, we might see a sharper drop. ATR is a great tool for setting expectations in such fast-moving markets. The bullish scenario, GWH keeps climbing. If volume remains high and positive news continues, the stock could break above the 5.33 resistance and set new highs. This would likely be driven by continued institutional buying or a fundamental shift in the company's outlook. Traders would look for confirmation from volume and momentum indicators to stay on the right side of the trend. The flip side, a bearish scenario could see GWH pulling back sharply. With the stock so overbought, profit-taking or negative news could trigger a drop toward the 3.65 Fibonacci support or even the recent low at 3.04. This would be a classic correction after an overextended rally. Watching for a reversal in momentum indicators would be key to spotting this shift early. Neutral scenario would see GWH consolidating around current levels. The market might need time to digest the recent move, leading to sideways trading between 3.6 and 4.8. This would allow the technical indicators to cool off and set the stage for the next big move. Volume and price action in this range will provide clues about which direction the stock might break next. Volume profile shows where the most trading has happened, highlighting key price levels. For GWH, heavy volume at 3.305, 3.6365, and 4.4445 means these areas are likely to act as support or resistance. If the price approaches these zones, expect increased activity as traders react. Volume profile analysis is a powerful tool for understanding market psychology and anticipating turning point. Fibonacci retracement levels are another way traders identify potential support and resistance. For GWH, the 61.8% retracement at 3.65 and the 38.2% level at 2.62 are key. If the stock pulls back, these levels could attract buyers looking for a bounce. If the rally continues, breaking above these retracement levels can signal further upside. Fibonacci tools are widely used for planning entries and exits in volatile markets. VWAP, or volume weighted average price, is currently at 3.6. This level often acts as a magnet for price, especially after a big move. Adaptive moving averages like MAMA and FAMA at 3.11 and 2.02 respectively are well below the current price, suggesting dynamic support if the stock pulls back. These indicators help traders spot areas where buyers might step in or where the price could consolidate. GWH trading so far above its long-term moving averages, there's a real risk of mean reversion. This means the price could snap back toward its average after such a big move. It's a common pattern after parabolic rallies, especially when technical indicators are flashing overbought signals. Traders should be cautious about chasing the price higher without a clear plan for managing risk. Money flow index at 98 is a rare sight, confirming that buying pressure has reached an extreme. When this happens, it often signals that the rally is nearing exhaustion and a reversal or consolidation could be around the corner. While momentum can stay strong for a while, traders should be alert for signs of a shift in sentiment. Such a dramatic move usually has a story behind it, maybe a fundamental catalyst, news event, or a shift in market sentiment. While technicals show what's happening, understanding why can help traders gauge whether the move is sustainable. Keep an eye on news releases, earnings, or industry developments that could explain the surge and influence what happens next. Given the exceptional volatility and overbought conditions, traders should be cautious about jumping in at current levels. The risk-reward ratio is less favorable after such a big move. Waiting for consolidation or confirmation of a new trend can help avoid getting caught in a sharp pullback. Managing position size and using stop-loss orders are smart strategies in this environment. Sum up, GWH's recent price action is extraordinary, driven by massive volume and extreme momentum. Technical indicators suggest the stock is overbought, raising the risk of a pullback or sideways consolidation. Support and resistance levels, volume profile, and Fibonacci retracement provide important reference points for traders. The next move will likely depend on whether the underlying catalyst is sustainable or just a temporary market event. WH's surge is a case study in how technical analysis can help traders navigate wild markets. While the excitement is understandable, it's important to stay disciplined and not get swept up in the hype. Use the tools and levels we've discussed to guide your decisions, and always keep risk management front and center. Whether GWH continues higher, pulls back, or consolidates, being prepared is the best way to handle whatever comes next.